Hey everybody, this is Jesse Ramos, your host for the Let Freedom Ring podcast, sponsored by Americans for Prosperity. We are here in Missoula, Montana right now for the State GOP Officers Convention. We are joined with a very special guest today, somebody that I've known for over 5 years, been a great mentor of mine, and actually the state auditor for the state of Montana and a land board member. So what the heck does an auditor do?
Well, you know, that's the interesting thing about running for this office, because that's a constitutionally named office, and the name has nothing to do with what we actually do. And so that's a struggle in the office, because we're a consumer protection agency, a criminal justice agency, and we regulate some of the largest industry in the state. We regulate the insurance industry and securities, so the financial services, as well as, like you mentioned, sitting on the land board with the other 5 statewides, basically managing almost 5.5 million acres of state trust land to support Montana industry, agriculture, natural resources, and to raise money for the public school system.
Well, for somebody that's known you for a long time as a jack of all trades, it sounds like a great job for you. You have to wear a lot of hats.
Yeah, you do, and it's one of those things where the more you do, the more you realize there's more to do. There's so much that happens in there in terms of insurance regulation. A lot of things that people don't realize that's happening behind the scenes. You know, some of it's obvious with issues with health insurance and some of the stuff that we deal with on there is the feds try to assert something that doesn't make sense in a rural state. A lot of times, the federal regulation of states just doesn't make sense. It makes perfect sense in a state like Florida or California or, California. But when you do something like the concept of network adequacy, so in health share, that means in health caring, it means health caring. In healthcare, I can speak English. Yeah. In healthcare, that basically means that you have to have certain types of providers, like a pediatrician or an oncologist, or within a certain amount of space from where you live. And in a highly dense state like California, those standards are easy to hit. But in Montana, where your next door neighbor may be 2 hours away, we have very different concerns. And so we have these conversations when the feds are trying to assert network adequacy, and they say that you can't have a health plan if we don't have a doctor within 15 miles or 30 minutes. And I'm going, I've got, communities in Montana, I've got counties in Montana where there's not one, all these providers with that. So I care that I have product available in 56 counties, and they don't seem to care as much. And so that's one of the struggles we do on that side of it. And on the normal insurance side, here's something that a lot of people don't realize, is that insurance basically is reinsured. So there's these reinsurance companies that take most of the risk from a domestic insurance company, and most of those are domiciled in Europe, like Lloyd's of London, or some of these big European reinsurance companies. And they have gone, I hate to use this term because it's so charged right now, but they've gone woke with all these ESG policies. And so they're starting to say, they're pulling back in a lot of what they're willing to reinsure. And for most people who've never even heard of reinsurance, don't understand how this is going to affect them. So we've seen already, farm mutual companies that have not been able to find reinsurance. And we had one go out of business 3 or 4 months ago because they couldn't find the reinsurance. And so I've gotten very involved with these European reinsurers, not because I agree with them, but they need to have a counterpoint voice there. And so here's something that a little bit silly, but made my point, is I had one of these large European reinsurers giving a presentation. They said, okay, well, we're pulling out of, oil and gas risk. Okay, that's, one of those prime ESG things. They also said we're pulling out of anything dealing with, human rights violations. And that, I get that. And then they said, and we're pulling out of anything having to do with animal rights issues. And so then the hair kind of stood up on the back of my neck. And so, we're basically in a room with all the state commissioners there. And I said, well, with all respect, this really scares me. And I said, I live in a state that has an agriculture, natural resource-based economy. And when I hear this, I just want to make it really clear. I'm in a state with about 1.1 million people, and we have 2.5 million cows, and we plan on eating them. Is that going to be an issue? And I was, it was a little bit of a flippant question, but the response was, we're not sure.
And terrifying.
Oh, it's terrifying, because what's happening is if they start pulling out and you can't find product that you can afford, it starts to really push money out of industry. And so that's one of these like kind of sleeping things in the back that a lot of people don't know. And so for me personally, people say, well, you're regulating the insurance industry in Montana. Why are you dealing with all these international issues? And why are you dealing with, a lot of it's on the federal side too, like I mentioned with CMS. It's because it is going to affect everybody in Montana, and we need to head it off at the pass.
And kind of to that point, I mean, we in Americans for Prosperity believe in bottom-up solutions. We don't believe in these top-down, one-size-fits-all approaches like you're talking about right now. And we're talking about how all these issues, they have all these unintended consequences, like an insurance company going out of business right here in Montana. What does that mean for the ratepayers? What does that mean for the free market here in Montana?
You're going to see rates going up. I mean, as the reinsurance market tightens up, you're going to see rates increasing, and you're going to see some of those that a lot of these rural communities depend on, like these farm mutuals that are not going to be able to. I mean, they're not going to survive without drastic rate increases.
It's absolutely terrifying what's going on, and healthcare is a huge issue right now for many Montanans, many Americans actually, and we see again top-down regulations. We see bureaucrats that are nameless, faceless, making decisions for different people, and we believe in the personal option where the individual gets the opportunity and their doctor to be in the driver's seat. And it sounds like you've kind of been on the front lines of that with direct-to-primary care here in Montana. Yeah,
and that's an interesting conversation because something that I firmly believe in is that we, the people, should have lots of tools in our toolboxes.
Absolutely.
And for some people, a traditional, health plan or an employer-sponsored health plan makes sense. For some people that don't have a employer sponsored health plan, what are their options? Well, they can go on the individual market, which they may or may not like or may not be able to afford. Sometimes there's, subsidies in these Fed programs, or maybe that's not appropriate for them. Maybe they want to do a relationship directly with their doctor.
Like they used to.
Yeah, and that's not insurance, but that's okay. You don't need insurance for that. There are other options in these direct primary care programs where you have a relationship with your doctor, where you've got a menu of things that they're going to handle, and you're paying them some monthly fee, and it's just covered. I mean, it's brilliant. Or even to subsidize a high deductible medical plan so that you have all that kind of day-to-day, I've got the sniffles, kind of, maintenance stuff. And that's a great tool for some. It's not great for others.
No, not one size fits all.
Yeah, exactly. Or sharing, these healthcare sharing ministries. That's a great option for some people. And what I see our role, as the insurance commissioner, is not to say you can't have that tool in your toolbox. My role is to make sure you understand what it is and what it is not.
Yep.
And, you make your decision on what's right for you, what's right for your family. You don't have it dictated that this can't exist.
Absolutely. Yeah. And on the direct to primary care, just to go back there, I think you hit on a very good point that that's not insurance, and it shouldn't be insurance.
Right.
That back in the day, when my mom and grandparents, when healthcare was a lot more affordable, when they went to the doctor, they didn't charge that to the insurance company. They knew exactly how much it was going to cost. They had a relationship with their doctor and all these services. So how does that kind of fit in, I guess, to the overall vision that you have for lowering healthcare costs?
Well, I think you hit on something that's very germane to this conversation, and actually very germane to how inflationary pressures and how things get out of whack. But I grew up in a poor family, and my mom, when she would take me to the doctor, I remember very clearly when we would come out, she'd go up to the front window and she would write a check, and for a poor family, she was able to write that check. So that doctor was pricing for that community, and that just worked. And so getting back to, kind of a more of a macroeconomic issue is the more money you put into any system, the more expensive things get. And so even go back to, subprime housing, the more money you put into that, the higher housing costs get. Go into education, the more money you put into student loans, the higher tuition gets. You put that into, anything, you put money into, the healthcare system, the more money you put into it, the higher the care gets. It's always it's like buying a bigger house. I've got all this room. Eventually you start filling it up. So you start putting more, you're going to start see issues. And I think that's in general a huge problem. And, I'm very pro education. I came out of academia. I was a research scientist at the Cron Institute of Mathematical Sciences. I taught at New York University, very pro education. But I think that the student loan programs have just gone out of whack, because they're putting so much money into the system that, college tuition is ridiculous. And not only, on the students that are borrowing, now they have these, parent loan programs so the parents can borrow and they can't ever get out of it, so they're being lent money that they can't ever pay back because they're these huge amounts that they just don't have the ability. And, buyer beware, they should be more thoughtful about what they're encumbering themselves with. And this is all money that it will never get discharged in a bankruptcy. Yep. So they're saddled with that, forever. So, I was dealing with a family not too long ago that took out Parent Plus loans, and they had $200,000 in loans, and their gross family income was under $60,000 a year. And I'm going, there's no way they will ever be able to pay that off. And they can't even get out of it through bankruptcy. And not to go down that rabbit hole, but really the main thesis here is, as we see tuition going higher and higher and higher and higher, it's because the available money is going higher and higher and higher. And sometimes that's, being borrowed by people that don't have any reasonable expectation of being able to pay it back.
Absolutely. Back when my parents went to college, they paid for their their schooling with part-time jobs.
Yeah.
And the reason why is because they couldn't get student loans because the bank wouldn't give them money because they were 18 years old. They had no credit history, no work history.
Right.
And then the federal government came in and started telling these banks, hey, we're going to guarantee this loan for you.
Right.
And so every single dollar you lend out, we're going to guarantee that you get paid back and you get interest.
Right.
So the banks are incentivized to lend out as much money as they can. And then the universities see this endless supply of money.
Right.
And the purse strings come off. Education should be cheaper now than it was 50 years ago.
Yeah.
You've got an entire multiple universities on your phone right now.
Yeah, I don't disagree with that at all. So going back to the question you actually asked, I think if we start having more of a push to community-based healthcare, like where I grew up, where you had somebody that priced for their community, had these, tools that we didn't have back then, like these direct primary, where you have, just an agreed on, monthly payment, and they would, deal with certain things. The important part for people to understand is that's not insurance. It's not intended to be insurance. It's not going to, in general, cover you on some catastrophic issue. But to supplement a high deductible plan, I mean, that may make sense to a lot of people. And having those community-based programs where they are pricing to their customers, their communities, so that the provider is not having to deal with an insurance company to pay them what they think is appropriate or whatever their negotiated contract rate was, I think it frees up a lot of money in the system and, in terms of what it costs to be a provider. And I think that would ultimately be a downward pressure in pricing.
And I want to touch on another big issue in healthcare that your office actually led the charge on last session, which is getting rid of the certificate of need law in the state. And do you want to tell listeners what that is? Because when I first heard it, I couldn't believe that even existed. I mean, it was so insane.
I mean, the real simple thing, and this is something that I, in general, think is bad policy, it was protectionism. It basically made it hard for somebody to get into a market and compete because they were so worried that it was going to damage the people that were already there, which is protectionism in any business, not just in healthcare, in any business. If you say, okay, you're a carpenter and you want to, open shop in Bozeman. Well, sorry, we've already got too many carpenters. And if they don't say we need more carpenters, you can't work there. I mean, that's kind of what we're talking about. It just makes no sense. And I understand, there's always, nuances to these things. And I understand not wanting to, harm a necessary provider that's already there. I understand that. But I think in general, this protectionism is not good policy.
Absolutely. And pivoting to yet another hat that you wear, I want to talk a little bit about your position on the land board and something that's really hurting Americans right now, which is the rising cost of energy. I mean, we're seeing it in gasoline, we're seeing it in electricity, we're seeing it in heating fuel, and we're seeing it 2 years into the Biden administration right now. Energy costs are at all-time highs. What needs to be done to unleash American energy at the state level and then also at the federal level? Yeah,
well, I mean, a lot of this is just having, I'm going to, use a little bit of a buzzword here, but just, looking at some level of tort reform of actually not having to fight a lawsuit every time you want to do something, different. And I know I'm so basically, and actually here's a good example. So we just gave praise to, there was a law that was just passed in this recent legislature in Montana that dealt with liquor liability laws. And so we were getting complaints from restaurant and bar owners that their insurance for liquor liability was going so high that they couldn't afford it. And it was, they were having to decide to stay in business or be uninsured. And so the problem was not that insurance companies were gouging them. The problem was that the liability was so broad. And so, in this instant case, if you had a half a light beer in one restaurant, went to another bar, had a couple of more beers, went to a third bar and did shots until midnight and had an issue, everybody on that chain had some liability, which is just not reasonable. Yeah. So tort reform is when you look at a law that's not reasonable and you revise it so that you don't have broad and unreasonable liability, which is what happened recently in liquor liability. And so generally making it so that it's harder to sue for frivolous reasons is a perfect example of tort reform.
Awesome. Thank you for talking about that. And how does tort reform apply to the energy space?
Well, just every time you want to do something, anytime you want to pull something out of the ground, there's going to be somebody that's going to fight that. And I'm not saying to completely pull the rug out from underneath that. There needs to, sometimes there are egregious acts and we need to have, ways of dealing with that. But it can't be so simple to, not have a dog in a fight and be able to delay or stop something indefinitely. And I know this is not energy, but it's somewhat related. It's like what's happening in out in White Sulphur Springs, where they have a copper mine that keeps getting permitted and keeps fighting these lawsuits constantly. And what's interesting to me about that is the same people who are fighting for alternative energy, which I agree with. I think I'm an all the above person. I think that everything should be explored, improved, competitive. I'm a believer in that. But we were putting up some wind turbines out at Angela Farms, and I can't remember the exact number, but it takes tons of steel, tons of copper, tons of rare earth metals, all this stuff that goes into that. And I'm going, well, where do you think that's coming from?
Yeah, exactly.
And so they fight to stop this, and and there needs to be some ability to question if there is actual risk. And, I know there's some folks that were worried that if something happened in White Sulphur that, you could get acid into Sheep Creek and it would travel the 17 or 19 miles to the Smith, which is, a treasure in Montana. Absolutely. And of course, none of us want that to happen. But if you actually sit down and listen to the mitigation and the plans for what they want to do, it would take such an intense act of God that ever be a risk. I just don't understand why they're fighting. And I think we need to have better conversations about what's good for all of us, what's good for the jobs, what's good for, even creating those alternative energy, opportunities. But, to talk about that briefly, like I said, I'm an all of the above. I think that we've used words that don't make sense to, it used to be to give a false sense of scarcity. Even the term fossil fuels, everybody has this idea that, petroleum coming out of the ground is, rotting fermented dinosaurs. They've got, oceans of hydrocarbon on moons around Saturn. There were never dinosaurs up there, so it's kind of a way of making something sound like it's something that it's not. But, we've got enough, hydrocarbon that our great grandkids can waste it. So the conversation should be, how can we continue to make that more efficient? How can we continue to make that more environmentally friendly? How can we continue to improve on that, which we've already made absolutely great strides in doing? But if that's part of the competitive process, and you're talking about what it takes to pull metal out of the earth to build a turbine, what it takes to pull oil out of the ground, what it takes to dig coal out of the ground, and that's all competitive and held to standards that are constantly improving to make it better, allow them all to compete. And the basic, economic drivers are going to, pick winners and losers, and those losers are going to regroup. I mean, we're very, we have a lot of ingenuity. We're gonna figure out ways to recover from a lot of that. But that's how it's supposed to work.
Absolutely. And kind of switching gears back to your position on the land board. So what is the land board for a lot of our listeners out here? We don't know.
Yeah, the land board, it's made up of the 5 statewide constitutional offices. So it's the governor's the chair. We've got the attorney general, secretary of state, my office, and the superintendent of public instruction. And we manage land, state trust land that we got from was granted to us by the federal government, basically to fund relevant education for a rural state. So we have land grant universities, and originally the intent was agricultural trades training, that sort of stuff, and so that has grown into the public education system, K through 12, in addition to the land grant universities and a couple of other beneficiaries. But essentially, what we do is we manage that land to raise money to fund public education, and it's a small percentage now because education's gotten significantly expensive, but it is what people need to understand when they say, well, I don't have kids in school, how does this affect me, why do I care about that? But every extra dollar that we make from these public lands that goes into the school trust is less money you have to pay for education from property taxes.
Yep.
So there's why it matters to you, and so
there was a time when what percentage was paid? It
was large in the beginning, and I can't remember the exact. I mean, that was one of the primary issues there. But now it's a fairly small percentage of that, but it's still meaningful. Even if it's 5 or 6% of that, that it's roughly $50 million a year that's coming from that's going to the schools. Well, that's $50 million a year that's going to come from another source if we're not doing that and if we're not growing that. But a big part of my personal philosophy is we can't just sell land. If we sell, it has to go into the land banking program. So that money has to be used to purchase replacement property. And that's a good tool because a lot of this is just checkerboarded across the state, and it allows us to, sell, underperforming property and try to get more contiguous property that becomes more valuable. But the big thing is we support a lot of the fundamental industry in Montana, agriculture, there's grazing leases, agricultural leases, natural resource development, logging, all these jobs in Montana. So we're supporting all of that industry, and then all the proceeds from that are going into the school trust. So funding this education, and we're doing it in a way that we have not a long distance horizon, a forever vision on this. So how do you do this and maintain these assets forever? So a lot of people ask me, well, you've just got this, crazy high bid on this piece of land to graze it, and it's $150, $200 an AUM. I mean, I'm just making up numbers for animal unit per month, and that basically says how densely you can graze it. I'm saying, well, if we have something that's not economically feasible for raising cattle in Montana, I worry that whoever's leasing that land is not going to be a good steward. They're going to overgraze it. They're going to, not deal with weed management. They're not going to deal with that property. So it becomes a problem for us in a couple of years if that doesn't work. So we don't always just take the highest bidder. We look to see who has a reasonable story that they're going to be able to fulfill the obligations of the lease. They're usually 10-year leases in a way that's not going to deplete the asset.
That is super interesting. And going back to you saying that the land board and a lot of the funding used to come from natural resource development for the schools, and it seems like, okay, we're 45, 50 million now, whatever that is. The higher that amount is, not only is it good for the schools, but that's almost a direct reflection of job and value creation if we can start to utilize more of our natural resources. So what can the land board do, if anything, to help bring down energy prices by allowing maybe more drilling leases, timber harvesting? And,
well, a lot of that, I think we're doing a good job. I mean, especially, a lot of this is somewhat market driven. What are the commodity prices? But some of the things that we've done during my tenure, and I mean, this is collective, it's not just me, is we went to an online bidding process for oil and gas leases, which has brought in more bidders, and we've seen higher returns on that, and continuing to find ways of really maximizing that income. In terms of the timber stands, DNRC does the management of our state timber stands. And I have toured a lot of these with DNRC, and they do a great job. They're managing, after a section is logged, they're managing the replanting, the natural versus the planted. When it gets to a certain stage, they're doing pre-commercial thinning to make sure that you have healthy trees that are developing quickly, so that you're not doing huge amounts of time until it's commercially viable again, and going through this process, and also keeping those stands cleaner from fuel and debris, so they're less likely to be a problem in wildfire season. And I think we're just doing a really, really good job with that, and I'm proud of the work that we're doing. There's always room for improvement. Yeah. And we look at that constantly, and some of it, comes from complaints or questions or suggestions from people that are on leased lands, and we deal with a lot of issues out there. But we're trying to make sure that we're being innovative, but being stewards of that land, and looking at that forever horizon. And some of the stuff is not obvious, because we all care deeply about access to public lands. In Montana, we all care about our public lands. We care about access. We care about taking care of it. And some of the stuff that we've done to increase access to public land, I'm pretty proud of what we just did with Mount Hagum and with the Snowy Mountains. I'm super proud of, because when that came to us, it was an FWP, Fish, Wildlife, and Parks acquisition, and the land was being sold. It was donated to Chaudere Hospital, which is a children's hospital in Montana, and so they sold it to FWP to help fund this hospital, which they do great work, and it's something we really need in Montana. So I was happy to see that. And it was great habitat that gave public access, because it was private land. So this now created public access and unlocked a whole bunch of other public land. But, my big concern about that, that's all great. I'm a big supporter of that. But also what I was concerned about as part of this was grazing leases. And so it was really important to us that we didn't take production, ranching, and farming away. So as part of that deal, we worked with the buyers, sellers, FWP, to make sure that we still had those grazing leases in there. So it's still helping Montana ranchers produce food as we increase habitat and public access. So there's a lot of interesting things we do.
Awesome. And it sounds like you guys are doing an awesome job. But on the energy front, what could the federal government do to make your guys' lives easier on the state land board, if anything, to allow more access to our natural resources here in the state? Well,
that's, because we only deal with the state lands. So for us, it's there's not a whole lot federally that can happen there. For the feds to open up, more land to allow access for exploration, to, allow for that, I think would help. But on the state land side, there's not really.
What about the regulatory process for the folks that do get a lease? They still have to abide by federal regulations, right, to fire up drilling sites. Etc.
Well, my experience is regulation can always be streamlined. And just looking at what's working and what's not. And, we're really good at doing that in Montana, and having that same attitude in the feds of actually looking at regulations. Like what we do in my office is we go through our administrative rules. We go through our statute, Title 33, that affects our office. And we have all of the different bureaus in my office look at it and read it and say what still makes sense, what doesn't. We just keep trying to clean up. And a big thing for me is what regulations are clearly in the public interest, clearly protecting something, clearly have a reason to be there, and which ones are just hurdles that are just slowing things down, and really identifying those and going after that. And I think that's just an iterative process that needs to be part of how we govern, just constantly looking at that and cleaning it up. Otherwise, you end up with these crazy laws that are no longer relevant. Like we still have a law in Montana that talks to your liability in supporting a surviving spouse and children if you win in a duel.
Yep, that is unbelievable.
Yeah. So if you challenge somebody to a duel and you're the winner and you maim or kill the opponent, then you have an obligation to support the survivors. And that's, yeah. So my point being is we need to just, constantly be looking at regulations and what has a reason in terms of the public interest and what is just a hurdle that's making things harder to do.
Absolutely. And obviously you're not a legislator, but you're very involved in the legislative session. And this is your second legislative session as auditor. So I guess what are you most proud of this session?
Oh, this session. Well, we had some interesting ones. A lot of it was cleanup. One of them that really made me smile is we had a model law on travel insurance that we had. We have a thriving internship program, and we use that. We've hired interns. We use that to get our message about what we do to the colleges. So we had one from Carroll College who was a political science student who worked with our government affairs director, and so we gave her this model law on travel insurance just to well defined to make it easier to offer that product in Montana. And we had her actually present it to House Business and Labor and answer questions. And then she presented it to Senate Business Labor. So think about that, being a political science student who gets an internship with a government agency and it actually allows to represent the agency, presenting that to the legislature. That really makes me smile. But some of the policy stuff. We supported telemedicine 2 sessions ago. We put in some PBM, pharmacy benefit manager legislation in there to just track that piece of the prescription drug supply chain that a lot of people don't even know exists, really just to turn the lights on so everybody understands where the money's coming from, where it's going, and decide, if it's reasonable. We didn't want to be a bull in a china shop and disrupt everything, but we wanted to turn the lights on. It had some transparency there. And the more transparency, I think, the better policy you start getting, because all the, everybody flees the light. You can see where they're going. This session, probably one of the most interesting things we did is we regulate the bail bond industry, because a bail bond is a type of surety bond, which is a type of insurance. So a surety bond is when you are guaranteeing somebody's going to perform. So in the bail bond, you're guaranteeing this person is going to show up to their court date. And so we've had some issues, and some have made headlines and some haven't, but there's still issues we've had to deal with on the fugitive recovery side. So the bounty hunter side, where Montana code spoke, to one thing. It said if the producer, the bail bondsman, feels uncomfortable, they may arrest the principal, so the person that's out on bond. So if they feel uncomfortable, so that's the only thing in law. And so we've got
terrifying.
So we've got these examples here, and these are just some highlights. This is not telling the whole story. Like we had one in Butte about 1.5 years ago, where the bail bondsman wanted to retrieve principal. And so he got somebody else that was out on bond, a felon, and says, "Can you help me?" He wasn't home, so they went to a friend's house, forced entry into this friend's house. And in Montana, what happens if somebody forces their way into your house?
Castle doctrine.
So they forced their way in, and there was a scuffle, and the felon who was out on bail got a firearm and murdered the homeowner in his own house. Not the person who was out on bail, so third party in his own house. And so both of them, the bond agent and the person that was helping him, they're, awaiting trial for aggravated burglary and murder. And then we had another one in Livingston where they were going door to door in a mobile home park trying to find somebody, found his, elderly relatives, assaulted them. Actually, there was some video footage of, from a doorbell camera of the person actually, racking a pistol, forcing entry. I believe they were maced, these seniors, as they're trying to go after this person, which is, in most people's eyes, unreasonable. This is an innocent third party. So in the last one, which was interesting, up in Cascade County, where they decided to drive into oncoming traffic, do a head-on with the principal, who got out, hands up in the air, and gave up, and then they're shooting him with non-lethal bullets, and the police show up and they don't know who's on first. They don't know what's going on. So it puts the police in danger. And so these kinds of things just told us that we, in the public interest, we need to do something. And my philosophy is I don't want to interfere with industry. I don't want to interfere with business, but I need to protect the public. So how can we put sideboards on this that still allow industry to thrive, but protects the public? So we said, well, what are the issues? First of all, we don't want to have any felons in that industry. So, and you have to be, we want adults. So you have to be 21. You can't be a felon. We also thought, a lot of people will say, well, murder is illegal anyway. Why do you need a new law in the books? Well, we said, well, maybe if they were trained on what they can and can't do and techniques in apprehending, techniques in dealing with, fugitives under the influence, non-lethal weapons, all that stuff, that would, at least if you knew what you could and couldn't do, that could head some of that off. So we required training. We also required, we didn't think that uncomfortable was a high enough standard. So you needed probable cause, which is still, it's a reasonable standard. So you have to have some reason to believe that they're not going to perform. It can't just be because you're uncomfortable. And we also said you have to notify law enforcement because we don't want to put our law enforcement at risk when something goes sideways and they don't know what's going on. So really, really reasonable. And, we worked with the bail bond industry on that. We worked with law enforcement, worked with judiciary, worked with everybody to try to really refine this into, reasonable policy that, protects the public from bad actors without disrupting industry. And so that's when we got passed through. And you'll like this. And I can't wait until they see this podcast. So one of the things that they came and said, after we'd gotten this to where we wanted it, is they wanted to have a mandatory 10% minimum premium. So they were guaranteed to get at least 10%, the bond agents. And I said, I want our bill to just be about fugitive recovery. And philosophically, I don't think the government should be setting anybody's minimum premium in anything. I don't think that's the role of government. No. And they didn't like that. And they also wanted to have a law that said you couldn't finance the premium. So you had to pay that whole amount up front. So if you get a $10,000 bail, you've got to have $1,000 in your pocket to get out. And I'm going, well, that's contrary to every other line that we regulate because you can finance premiums and anything else. Yeah. So, that didn't quite make sense to us. Plus the fact that it would contribute to jail overcrowding because less people would have that, cash available to them. And so we were concerned about that. And we said, well, if you want to do that, run your own bill. And so they took our bill and almost copied it verbatim. I mean, they used the concepts in our bill and they added that to it. And then started testifying that, our bill was going to destroy the industry. And I'm going, the only thing material that's different is this guaranteed premium and this prohibition on financing it. I'm going, and they kept saying, well, it was on the, on the books before, and nobody can find it. Nobody in, the lawyers and the legislative services can't find it. We can't find it. They can't find it. But it just went a little bit crazy. So they actually got that identical bill with the 10%. They eventually got it through the legislature last minute, and then the governor vetoed it. So we'll see if it gets overridden.
Yeah, that's an interesting process. But I know that we're just about out of time, but I really wanted to touch on another big issue that we're working on, which is reigniting the American dream for so many Americans.
Right.
So right now, 2 years into the Biden administration and Senator Tester enabling a lot of Biden's policies, the American dream is out of reach for a lot of Americans. And first, I'd love to hear your American dream story and if you still think that's even possible in today's climate.
I think it is possible. I think it's still there. I think that, we have a generation that are just looking at the world a lot differently. We've gotten comfortable with not showing up. Just look at, what's happened in the workforce. And, it's really interesting. I was talking to an economist recently about, the recovery of the workforce pre and post COVID pandemic and, how much that dropped because a lot of things were shut down. People weren't working and, the extended unemployment benefits and everything else that caused that. And then he showed that coming back, and it was, I can't remember the exact percentage, but let's just say for sake of argument, 5% higher, and we're at, record highs for workforce engagement, record lows for unemployment. But he also said, but we're also about 20% low in productivity. And it says, because everybody's working from home. It says people are less productive, they're less engaged. And there's a workforce now, it's a thing that a lot of employers are having to, struggle with, is they are trying to get employees in. A lot of these employees are used to working from home and want to work from home. And so they have to have this remote work as an option to hire employees. And they're getting a less engaged, less efficient workforce. And so one of the things that concerns me is my whole life, I've been trying to learn from others. And you learn from others by sitting across from them, talking to them, asking questions, having them criticize you and commend you. That's how you build that. And especially from a young workforce, if you're not getting that because you're not working with other people, I think that American dream, as you put it, gets harder and harder to get because it becomes more of a lower commodity. And, I'm not going to discount that is something that'll work for some people. I mean, if you're in your twilight years of your career and, you're getting ready for retirement, you already know what you're doing, maybe not doing that 2-hour commute makes sense.
Yeah.
If you're coming into the workforce and trying to figure out how to change the world, you need to be around people.
Yep.
And it's not going to be Zoom and, Twitter and Instagram. You need to be around people. And so that's something that concerns me. So is that still available? Yes, it's still available. Do we have folks that are engaging to the point where they can reach for that brass ring? I think, less and less so, because they're getting used to this kind of remote, thing where if you need food, you click on your phone. If you need a job, you dial in on Zoom. If you need a ride, you go to Uber. I mean, everything is just so easy and different than it was for me. But, for me, I just, like I'd mentioned before, I grew up in a poor family. And I just knew I wanted more. And I worked and I worked hard, went to school. And like you'd mentioned with your story and your family story is I worked my way through college. I never just went to school. I had to work. And, I ended up getting hired at New York University. It's I think important to note that my research and teaching position started before I finished my undergraduate, so I never actually finished my undergraduate.
Wow.
But being around really smart people, was engaging to me and gave me the ideas and drive to reach for more and more and more. And so when I had made it, I've got a research and teaching position at NYU, and I quit to do a startup company. My mom was like, what's a startup company? And that was the beginning of the tech age. And, my company, we merged with Yahoo when they were in their nascent, years. And that was a life changer for me, and that is not, it's not about being smart. It's about being engaged. It's about being risk tolerant. It's about, always not taking status quo. That's something I say in my office too. I said, we don't just check the box. We don't just, meet the minimum requirements. We keep setting our bar so that we're at a level by which other agencies should be measured. Always trying to push that. And that mentality is what drives success to build that American dream. Making sure that it's not going to happen to you. You have to make it happen. And if you're not making it happen, it's not going to happen other than some, freak accident. And so I think that engagement is really important. And the more technology takes us away from that engagement, I think the harder it is for people to realize that that's still there.
And kind of along those lines, I mean, you obviously have an amazing story and you've achieved the American dream. And I know a lot of folks have. But as government gets bigger, as Joe Biden's policies take effect, how does that push the American dream further and further out of reach for everyday Americans?
Well, I mean, a lot of things it really, one of it comes down to one basic thing. I mean, government is not there to, cradle and coddle you. It's there for basic protections and basic infrastructure. And the more it takes decisions away from you and choices away from you, the harder it is for you, like I said, to take those risks, to move forward. And so I think that the more things that are decided, like we were talking before about, whether you should be able to do direct primary care versus, traditional insurance, taking decisions away from somebody takes them out of the driver's seat. And I think that really creates this kind of, bland, mush. I mean, you don't have that opportunity to take that risk and make something happen that may not be in line with what other people are looking. Because, let's face it, the outliers, the people that are really, really doing something, it's because they're not standing in line with everybody else. And I think the more the government intrudes upon our lives, the more we just tend to fall in line and do the same thing. And, like what I was talking about in my agency, where I've get people that are, been working in government, for a long time and say, well, this is just the way we've always done it. I'm going, well, if this is just the way we've always done it, nothing's ever going to change. You're never going to innovate. You're never going to move forward. And so I think that, trickles all the way down to, how we live our lives and take advantage of opportunities.
Absolutely. Well, I think we've taken up enough of your time. I know you're
Great.
a very busy man, but we really appreciate you coming on, and
Thanks
look
for
forward to
having me.
having you again.
Yeah, great. Always a pleasure, Jesse.
Yeah, thank you so
All right,
much.
Thanks.